Hey guys, John Paulamy here. Tuesday, July 21st. Wanted to make a quick video. Gold and silver making multi-year highs. Pretty important, I think. We see here we've got gold, traded as high as like $1,843. It's a little overbought now. Silver put in a really nice move and it just kind of blew through. Kind of was going sideways for almost a year here, and just in the last couple of weeks, it's just blown right through the old highs. It traded up, 21.50 an ounce. It's overbought though, and what? Why is this happening? Right? Been talking about this on this channel for since the inception of the channel and since I've been making videos. And I just want to bring to your attention, this is an article I saw, and, the Fed is getting ready to change its policy. It's going to shift its policy and allow inflation to, quote, run hot. We've talked about this before. They were contemplating it before the crisis, but now I guess they're going to move forward with it. And basically, their research suggests that refraining from liftoff until inflation reaches 2% could lead to some modest temporary overshooting, which would help offset the previous underperformance. So what they're saying is that we've had this underperformance in inflation. They have this view, the masters of the universe at the Fed, the PhDs, 20,000 PhDs working there, and the average salary is $200,000 a year. And it's nothing different than Gosplan, central planning in the Soviet Union. So what they think is that we haven't had enough inflation. We've been underperforming on the inflation metrics, even though we've done all this money printing, we've done Operation Twist, QE 1, 2, 3, and 4. We haven't had enough inflation. So they're going to let inflation run hot in order to make up for the lack of inflation we've had in the past. I mean, does this sound squirrely to you or what? I mean, if you're a normal person, if you are a wage earner, you don't want prices going up. You want prices to, as more goods and services are created in a free market, you'll have a tendency towards disinflation. You'll have prices come down over time, right? You can look at a 200-year chart of commodities, and commodities have, they have some violent upswings based on wars and monetary inflations, but typically over time the price of commodities has went down over time. The price of goods, phones, quality computers, they get better and cheaper over time. So if you're a wage earner and you have real money, you will note that your standard of living goes up over time because your purchasing power should increase. But now you have this Federal Reserve, all right, that has a monopoly on creating money, that knows how to pull the levers and push the buttons. You hear me use this term all the time. There's some, they know exactly how to do this in the right sequence to get the right outcome, right? Does anybody think any of these dipshits actually know what they're doing? I don't. It's central planning right out of Gosplan in the Soviet Union, the 5-year plan. So they're going to let it run hot, quote unquote. They know just when it's like a dimmer switch, right? They can just turn it up and down. Well, it's not that easy. And the problem is that I don't have time to get into this video, but you can change people's mindset towards inflation and deflation, and it changes their behavior. The reason people hold the US dollar as a store of value or use it as a means of exchange is because they have confidence in it. They have confidence that the monetary authority won't debase it like in Honduras or Bolivia or, some other banana republic. And what you're telling people is, okay, we are going to debase the currency. Minimum of 2% a year. And not only that, we know better than anything. We can do this. And so, I think this last quote here, this last bullet item is very important. It says, the hotter the price inflation gets, the more difficult it will be to bring it under control. 3% inflation is very likely, possibly 5%, but I can't rule out 10 or 13% if the Fed really screws things up, given their fatuous thinking about inflation and their overconfidence on how easy it will be to get price inflation under control once it starts to climb at a serious pace. I think a lot of this, they were discussing this before we had this self-inflicted depression that we caused ourselves based on our COVID over response. they were talking about this. I remember doing another video when they were just discussing this. Now they're actually going to implement this policy. And I think they have to. Why? Because it's going to give them cover for the monetary debasement that they need to do in order to cut all these checks that they're doing. I mean, let's look at, I pointed this out either this week or last week in one of the videos. I mean, the federal deficit in June was like $840 billion. It's not like people are buying $840 billion worth of treasuries. The Fed is monetizing that debt, and the Treasury is then spending it. They're sending out unemployment checks. You know, you've got the Congress back now talking about doing another stimulus, right? Doing another extension of unemployment benefits. Nancy Pelosi saying, you know, $1 trillion isn't enough. You've got both parties talking about doing an infrastructure bill of $1 trillion to $2 or $3 trillion. You have this view of MMT now getting traction in circles, right? And so I think, you know, this policy shift, if you will, to allow inflation to catch up because it's underperformed for years is a cover story to do what they want to do anyways, which is print money and give it away. I mean, I'm not going to poo-poo that. A lot of people, you know, are going to, I'm not going to name names, but people are going to say, well, you know, these hardcore, hard money people. Hey, look, we had this self-inflicted depression we caused. We've got tens of millions of people on the verge of, you know, starvation. I'm looking at articles where a third of the people last month didn't pay their rent or mortgages. I mean, people are hurting. Somebody has to do something. But this, do not delude yourself. This will have a negative result down the road for most people. And what I've been preaching is that we are going to have, I mean, this is all lining up perfectly for us. We have equities, stocks at all-time highs, right? We have the concentration in the FANG stocks. Everybody's getting into the same stocks. Everybody's buying stocks because stonks only go up, right? That's what Dave Potenoy says. And then you've got commodities and resources trading at all-time lows, record lows relative to equity prices. It's the classic reversion to the mean. And now we have a catalyst. The catalyst is here. That's going to be the unprecedented amount of money printing, not just in the U.S., but around the world. That was already happening before COVID. That was happening last year. I was pointing out the fact that gold was making new highs in most other major currencies besides the dollar because all the other central banks were debasing their currencies quicker than the U.S. was relative to the U.S. That's all this is a relative game. Who's debasing their currency the quickest? And this is why I'm shifting, you know, my emphasis away from bullion into the stocks. You want the leverage now. You want the 3, 4, 5 to 1 leverage because as these, you know, if gold doubles and goes to 3,600, okay, you've protected your purchasing power, your wealth, okay? But if you're trying to create wealth, these companies that mine gold and their all-in costs are, you know, $1,000 and the gold price is going up hundreds of dollars. Yes, their costs will be going up, but the price of gold and their leverage to the gold price will give you exponential returns. It's not just happening in gold and silver, folks. It's happening in copper. You know, we saw breakouts in a lot of oil stocks today. A lot of the juniors that I follow are really looking good technically now. Why is that? Okay, classic what we've talked about before. You know, I mean, as things return, you know, oil, copper, gold, silver, these things cannot be created at the whim of a bunch of, you know, PhDs at the Federal Reserve that can create currency units ad infinitum. You can create the currency units faster than you can create the actual resources or the goods and services. And that's how you get price inflation. That's what we're going to have. And once it starts and gets embedded in the psychology of the population, it's very difficult to turn it off. If you don't understand that, you should review what happened. Paul Volcker, you should look him up. You should read the history of monetary policy in the late 1970s and early 80s in the U.S. and the fact that Paul Volcker had to raise interest rates to over 20% to crush inflation that was getting to like 10 or 12% in this country. I mean, I was alive then. A lot of you guys are young guys in your 20s. You don't even know what I'm talking about. It can happen. And once you get that mindset, and people don't want to hold those hot potatoes anymore. They're certainly not going to hold 10 and 30-year treasuries that pay, you know, less than 1%. I can tell you that. And that's why you're seeing money go into gold and silver. You're seeing money go into resources. You're seeing money go into commodities. You're seeing things go into, rare art. Baseball cards are taking off. Okay? I collect PSA 10 slabbed, graded Hall of Famers. That's what I collect. That's a hobby of mine. I had to stop buying them because the prices are going nuts. It's happening in real estate. It's happening in a lot of real assets, things that cannot be created ad infinitum by the Federal Reserve or by some politician in unlimited quantities are going up in value relative to the dollars that can be created in unlimited quantities. So I wanted to just talk about this. This is where we're going. Breakouts are happening. You haven't missed the train. We're going to get a pullback. These things are overbought. But if you haven't bought, and I'll be looking to reload. I mean, I have positions that are doing very well. And on pullbacks, I intend on reloading on several things. And, uranium, hey, the stocks are starting to move. That's telling me, the energy stocks are starting to move. That means we're going to probably see movements in some of these underlying commodities and resources. So I wanted to talk to you about that today. It's coming. It's not going to be stopped. The best thing to do is get positioned and take advantage of it. All right, guys, that's it for today. We'll talk to you next time. Thanks.